The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days, and new 11 o'clock till noon, and 877-927-6648. That's how easy it is. Looking at the charts, what do you see right now? You see the E-minis held this dashed line support in the symmetrical triangle in the daily chart. This is the S&P E-mini. It's up 23 at 2096. It is just testing the upper trend line resistance. Now I could raise that. I usually like to have at least 2 points of contact, but if there's 3, that's important. And then I can raise it to the next level. So it's either right at, I'll tell you exactly. There you go. So it's right at 2098.50, and the high today so far is 2097, round number. Which I think will be taken out. That's the resistance to pierce, and the very next one will be just there. I'm doing it by eye, and it'll be just there, 2100.50. Those are the levels. In the next 2 days, if we go above 2102, then all of a sudden what we've got is in the E-mini, you've got a very, I showed this to subscribers this morning, we were expecting a rally. We just missed entering a long position that was based on one of the indexes. I believe we missed it. I should actually double check. Let me just see. I wanted it at, I don't think I got that. Okay, let's just do this. And we're looking at it. What was the low? Was the low 60? Oh, no, not even close to the low. Just spiked right higher. Pity. Okay. Well, we wanted to play the long side. We're on the short side. We were heavily on the short side. I'm going to go through a bunch of things in a moment, but right now what I wanted to say is that we covered a bunch, and I am anticipating that this is a rally that should last. We'll see whether it's going to last longer than 3 days. Most importantly, what we're going to be monitoring is which sectors are participating very well in this rally, in this counter trend. I'm calling it a counter trend rally, and which ones are failing. And my suspicion is that we have, in my opening call newsletter, we have pinpointed the potential weak ones, and we'll see if that's going to come to pass in this counter trend rally. Very strong move from 2062 to 2096. That's a 34 point move. In the E-minis just from late Friday. So watching it closely. All right, let's move this 120-minute chart away. We're going to run the numbers. Run the numbers, there's a lot to talk about. I want to talk about gold and oil and stuff like that. Okay, let me move this monthly chart there. Let me move the weekly chart there. Let me move the daily chart right there. And we're all set to go. The Dow is up 223 points at 17,597. Remember, in a bear phase, counter-trend rallies can be extremely powerful and quick. That's if it's a counter-trend rally. If it's a brand new buy signal, a lot has to happen before we can actually get a confirmation of a buy signal. But the weekly chart says, hey, this is not bad. We're back above the 9-period moving average at 2088. Okay, let's go to the market. The Dow, as I said, up 225 at 17,597. Held the support, and this is what I showed my subscribers. Quite a lot of charts I sent out over the weekend. Gosh, you were all prepared for what was going on. I spoke about the inside wedge, the declining wedge that always has a bounce, and that bounce should fail fairly quickly. We have specific levels we'll be looking at. Meantime, the support on the Dow, if the Dow reverses by the end of the day or tomorrow and goes back under 17,470, somewhere around that area, closes under that, that's just a horrible failure. I don't think it's going to do that, because I think what we're looking at here is lower lows and lower highs, but not easy until we start the acceleration down. And we can go into that in greater detail. S&P, SPX.X, S&P, nice bounce. It did not make a new low on Friday. That was another positive. And in fact, if you want to be very critical on a technical basis, the S&P is a trend line that it held beautifully. Look at that on last week on Friday at the close. So this is very important what's going on now. And we can actually draw a declining line right here, right there, and say that's probably the area that we're going to be watching closely on the S&P, 2105. Right now we're at 2101. I think we will go above 2105. I just don't think this is going to be easy. I think if you've identified the sectors that are weak, that's good enough, because it's very important to be able to try to pick at the very turns so that you have very good comfortability in the short factor, so that you can take short-term profits or small losses on the trading part of it, but the core positions you want to try to hold. So the S&P has support. If it closes under 2088, make it 2084. Below 2084, that's really negative within a few days. But so far, I think this is a very nice counter trend bounce. It's the daily trend line that's really important here. I'm going with that one for now, and that says, yeah, that's a 2106, that whole 2104, 2106 area. That's going to be the big test. Not far to go, but at the same time, we're talking about on a daily basis. On a weekly basis, we're looking at something a little differently. Now, let's go to the VIX index. The VIX index was very disappointing the other day. It rallied nicely. We took a little profit. We were in a nice position, but actually it didn't close as well as it should. Didn't even close above the 9-period moving average in the weekly chart, above 1360 something, 1380. And it didn't. It closed on Friday at 1339. And now it's trading at 12.48. This is a very interesting scenario. What it is telling us, I don't know, what it is telling me is that the intensity of the move to the upside over 6.25 years, just over 6 years, has been so intense that there are few sellers. The sellers are reluctant. Number one, they're reluctant. And number two, they've been burned so many times by shorting or selling too early and seeing these indices go to higher highs and higher highs and higher highs and higher highs, that at a certain point you just say, I'm done with that. I can assure you that if the Dow breaks 17,000 in the next month, that there will be a lot more people becoming convinced that the selling is the way to go. And they will have missed a move from the 18,300s. They would have missed 1,300 to 1,500 points, and then they would start the selling. So it's one way to look at it. Now, the volatility index, if at any point this week it just suddenly screams up on the upside, it has no choice. It has to close above 1490 to really start to show that it has legs to the upside. And in fact, if I'm really critical about critiquing the VIX index, it has to close above 1627, the high of the 27th of July. Otherwise, there's just going to be a very orderly move to the downside with very strong spikes to the upside, but still making lower highs and lower lows. Let's just quickly do the IWM. IWM hit the 9-period moving average of 121.58, pulled back, made a lower low on Friday, a legs D. This is going to be a trough D. There's no new low today. And the weekly chart says technicals are terrible, but the price is not broken down at all, certainly not in the monthly chart. But the signs are that the technicals are suggesting lower highs and lower lows, and even in the monthly chart. The QQQ series. Now, the Qs are already impacted quite a lot by the IBB stocks, the NASDAQ biotech stocks. So it's up 1.05, actually up a very nice percentage, it's up 0.95%, but not as good as the Dow, up 1.27%, and the S&P up 1.1. That is telling me that the Qs are struggling to maintain their leadership role. Look at that monthly chart, how beautiful that is. Hasn't closed below the 9-period exponential moving average since it broke out the last time, and that is good grief. Close. Since it broke out with that beautiful candle in October of 2011, that is extraordinary. You can't find many moves like this in a major index that has gone up for so long without breaking and closing under the 9-period moving average in the monthly chart. And I'll get to the questions in the den. I'm trying to keep my train of thought here. I don't want to, it's easy for me to lose it when I look at so many charts. Now I want to go to the New York Stock Exchange, NYA.X. Look, the New York Stock Exchange held quite well. It didn't go even close to the low of the 27th of July, 10,636 on Friday. It only went down to 10,728, having a nice rally. And yeah, I haven't even put the downside channel, but the upside inside track resistance is saying that, yeah, you might be able to bounce to 10,920 or at 10,877, up 113. Now, hey, that's a good move. But that's going to be very strong resistance as we continue this M pattern, the H that goes to an M pattern. And now I want to go to gold. GC, nice move up 890 at 1103. It's continuing this pattern that we're looking at. But this time, I think there's a chance for a larger H pattern, one like this, which says you could get to the 11, maybe the 1120 area. You're at 1103 right now. That's a possibility. Let me just move it away here. See, the weekly chart has actually shown something that you would not have seen unless you were a chartist. And that is, since the low bar of the week of the 24th of July at 1072.80, you've been making higher lows, and you've just snuck to, I don't want to talk out of turn, 1179, 1104.90, 1104.70. You are about to try for the first higher high bar, and that's going to be very important. That'll actually be the first leg A in the weekly chart. But look at the monthly chart. Monthly chart has still got terrible technicals. Doesn't mean to say you couldn't bounce to the 1166 9-period moving average. I'm just saying I'm still seeing the gold going lower, low highs, lower lows. And I finally figured out why there's one particular gold selling place probably will stay in business a lot longer than I anticipated. And that is because they do jewelry. They do a whole bunch of things. So it isn't just gold. And he must be doing very well, because I suspect when you get all this, when people come in to talk about the gold, they might not know what they have in the actual ring, let's say, what jewelry, whether you got a diamond, a ruby, or whatever it is. They might not know. So you could get a little bit of a fortune there by being by analyzing correctly. Okay, so let me just do this. Bonds are down 1.5, and we'll be back in a moment.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So let's continue with the litany of indices ups and downs. You've got high-grade copper at this particular point in the daily chart, having made a left side, right side price time match to, excuse me, to the high of, to the low, that is, of the 8th of July at 23,810. And that went to the low of January the 29th of 2.4035. Well, you came down, the two wave counts, and they all coincide to make this either an E or an F, the low today, but there has to be a higher low tomorrow in the high-grade copper continuous contract to be able to consider this candle a very powerful candle. Let me explain. You went to a top that was peak C1, C2, C3, and then C4. Very unusual pattern. And at the same time, it was saying that until you broke to a leg D, you got to consider that break under key support levels, in this case the 200-period moving average, and then all the other averages would be a negative, and high-grade copper is basically plummeted from up in the 2.90 area to the 2.31, 32 area that we hit this morning. But most importantly, when you look at the weekly chart, I had shown that left side, right side price time match basically in just a dashed line. And this is very important because it took a close below the left side low and then 2 bars, 2 weeks, that is, of lower lows, and even this week's a lower low. So I'm going to consider that I have to give the benefit of the doubt to the bear side still on the longer term. But shorter term, look what's happened. You've made an arch formation and you're getting the technicals. We watch Friday, this coming Friday, how the technicals perform if the rally continues towards the 2.47 area, the 9-period moving average. Not sure we can do that in a week, but this is a powerful session today so far. Then when you get the monthly chart, remember that uptrack, the Chapman wave uptrack from a channel that I had used, we went right into it. And I said, we're going to have to monitor this real closely because a lot happens on the shorter term. And I said that the 120-minute chart leads to the daily leads to the weekly, etc. And now look what's happened. You've got the 120-minute chart going from with a beautiful positive divergence between the higher lows that were made in the MACD and stochastic back on the 9th. That was on, what's the day? 10th. So that was last night into and on Friday. And look what's happened. You've got the price shooting up from here, all in a leg B, and it hits what? It hits exactly the 200-period exponential moving average. So this is one of the most powerful moves we've had in an immediate thrust off the bottom. We've seen this before, but you've gone A, B, C, and a D. At this particular point, you've had not quite as big a move, but this is still only leg B, and we finally got to the 200-period moving average. So I'm thinking short term, this is a positive, and I'm going to put it together with, look at the crude oil. Crude oil had a very nice session from about 9 this morning. It was kind of hanging around, and all of a sudden it started to move higher. And this is a leg A, B. This is a leg B hit at 200. No, this is the, which moving average is this one? Yeah, 50 moving average, 50-period moving average, which it was repelled from before. So crude oil is also saying, hey, wait a minute, don't forget about me. So the commodities, and I spoke about this last week, I said the commodities are very close to some kind of a rebound. I don't want to get too carried away. We've seen these things before. But what's really important is that it goes together. Let me just show you the dollar, DXY. See, the dollar went to that high. I did call it C. I don't know what else to call it unless it's recycled. And that's going to be an A, B, C. I don't know what to call it. I've got it to C. It's very unusual to get to this pattern where an A starts a brand new move, but everything else is saying, hey, it looks like one of those tops are forming. And I'm suspecting that with the MACD being much weaker on this last rally, that this is going to be an alternative wave count. I'll figure that one out later in the day. And the stochastic's under 80%. But it really wasn't that. It was the weekly chart that said to me when I was doing the work over the weekend, we've pushed to the right. I love a cup formation. Look at this cup formation here, just as an example. This is the one I missed, you remember? BDBD. This is Boulder Brands. I had drawn the whole thing out. I had done everything I should do. And then we got into the trade right here. That is the pattern that you want to see. You want to see a nice breakout. I think it's better this way. Oh, you know what? This is actually not such a great... oh, daily. That's what I'm looking at. There it is. I knew I'd drawn this out. As we go to the break, have a look at this chart. That's what you want to see, a cup formation. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 209, S&P's up 22.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back. So I want to talk. We spoke about the cup formation. I want to see a decisive cup. I want it to look like a cup, the same as an arch. And talking about the arch, one of the reasons why we were anticipating that on Monday, this was over the weekend when I sent out just a slew of charts. Gee, I wonder if I can find this without taking up too much time here. IBB Daily. Let's just do one at a time. IBB Daily. That's not it. Nope, that's not it. All right, we'll find it. We'll find it. I wanted to show, I explain what I'm looking at here. I wanted to show the different techniques that can be used in the arch formation, just as you can in the cup formation. And yep, there it is. So I had shown this to subscribers a long time ago, back when, after that bar there, and I had drawn in a left side, right side price time match, and I drawn in like a fan coming to a wedge conclusion, and all of it pointed to somewhere around the 7th or the 10th of August. And here's that H pattern that we always talk about, the lowercase h pattern. What did the IBB do? It went right down to the left side low, 361.89 in the daily chart of the 8th of August, 8th of July, and it did that on the 7th of August. It went to 361.63. So you went to within you went under it by 20 cents. But the left side low that I used the measure for, the left side to the right side, was 360.56. And that said to me that we have no choice. We want to cover some of our position in our long position, or it's the short ETF. And we want to come back again, and we want to look at the arch formation. We want to see, and so in other words, there was nothing there, and now there's all of this, filled it in. Now we're getting another counter trend bounce. And this counter trend bounce, and we go back to the daily, says 377 is the 9-period moving average resistance. The high today was 376.53. But I would not be surprised if the market holds into the close, it's up to 221 in the Dow, 23 in the S&P. If we still hold by closing it even above 175 higher in the Dow, and the S&P is, so take up 17 to 18, that's still going to suggest to people who are short that they better be real careful, and there will be more covering. So I'm suspecting that we've got a little bit higher to go, and then we'll make another arch formation, like an M type thing. This is my thinking. And why do I talk about this? Because the H pattern is in the 120-minute chart has become the new cup formation that I think is going to become a Chapman wave right shoulder failure. And that says this right side of the cup will not extend more than 50, maybe 60% of the entire move. And in fact, we'll start to turn around. And that's what we're going to monitor, whether or not we're going to go back into even more of a short position on the IBB. And it's been one of the greatest sectors. Gosh, I can't tell you how many times over the weekend, just purely by chance, speaking to different people, friends who know this area very well, who were saying, oh, the biotech is unbelievable. Kendall Square and MIT link up and all that stuff. And I'm saying to myself, very interesting. I have exactly the opposite point of view. I didn't say that to them, but the opposite point of view, that they've done everything that they need to do, and all that we need to see now is a digestive period in the biotechs. They've had their day in the sun. So now, at least for now, they can still go higher later, but I think they're going to have a pretty decent correction. And when you look at the healthcare, it's the same thing. Now, what I did want to do is I want you to look at the TLT. TLT right here. See, the TLT went to a peak E. Well, if there's no new high today, it's a peak E in the daily chart. It basically threaded like a cup and handle, and that says to me that resistance at what most fund managers look at is the 200 period not the simple moving average of the 200 period, the daily chart. I look at the 200 exponential, which is way down here. Right now, that's at 121.81. The TLT is trading at 123.03, down $1.31. And look, that high that was made Friday was right at 124.43 is that moving average resistance. It went to 124.50. So now you can see that bonds are maybe going to take a little bit of a timeout, just a brief timeout. I'm saying brief, you never know. Leg E in the, let's see, this is the daily of the bond continuous contract. So now let's do this. E right there. What I want you to do is look at the bigger picture, and the bigger picture says that was a huge move to leg B in the weekly chart, but look at the monthly chart, that whopping up channel has held so far, and it's holding the 9-period moving average at 157. So if I put the TYX.X, which is the Tyrannus Rex, what is that, TYX? Where did it go? Somewhere there should be, oh, it's typed in there. Gosh, I haven't got used to this yet. They made a change at TradeStation. I just haven't picked it up. How do I go to this little box where I type in the name? But everything else is working beautifully. So what we're looking at here is the TYX, which essentially is really a Tyrannus Rex. Now look at this, on the downside that is. This is the yield. This is the 30-year Treasury bond interest rate yield in this whopping multi-decade decline, but it's starting to form some kind of working hard to make lower lows. And in fact, it isn't going to higher highs, but it is holding steady in this range. And that's what I think we're looking at in bonds. I think bonds are essentially saying to me, at least, I'm not ready to go higher. The bond yields. I'm not ready to go much higher yet. When I do, this entire basing area is going to be the big resistance going all the way to, let's call it 44, the 200-period exponential moving average in the monthly chart, 4.48% on the 30-year. A close above that is going to suggest something different is really happening. Be careful. But so far, we just stuck in the range. With the economy the way it is, I don't see the Fed having a reason. And if they don't do it in September to raise rates, if they don't do it in September, I think politically they stuck. That's just what I'm thinking of. Now, I want you to go out of this particular chart right here, and I want you to save, where are we? Save all workspaces. Then I want you to close, and I want you to go back to my triple yield chart. I didn't send that out to subscribers this weekend. I mean, there were just so many charts. Close workspace. Yes. And now we want to go to this particular one here, long-term, right there. And look at this chart. This is very, very interesting. There we go. You've pulled back from the peak E. You remember what the big deal I made? I said in this particular pattern, the yield very often only goes to an E. It has occasionally gone a little higher to the to an F and a G, right? Or not occasionally. Once it went to the F and G, that was back right at 13, crossover to 214, and it went to the year 2014. It went to 39.74 and then came tumbling down to 22.26. Now it's at this 50, but not even a 50% rally to 32.55, and it's pulling back. I suggest to you that these yields are just stuck in the range, and that there's not that much now on the downside, and there's not much on the upside, just in terms of this pattern. But if we do see the yield break either way, it would have to be under, it's at 2.887. It really would have to break somewhere around the 2.630 area in the 30-year, or above this trend line that I drew in, this horizontal line, somewhere into the 31.70 area. To make a change either way. But right now, I think it's just kind of stuck. That's what I wanted to get to. And there was something else I wanted to show, if I can just move this away. We've got Brenton Martinez. Brent, how are you?
Good morning, Basil. How are you? I'm
well, thank you.
Happy to hear that. I was calling about silver, and you can look at either the contract, the SIU, or the SLV itself. Just like the cut formation, and seemed like there was, on the silver contract itself, some resistance around 15. We haven't closed yet today, but I've been waiting for it to break that. I'm long 500 shares of the SLV at 1404, and then I have some options and calls as well. So just wanted your opinion, if you could, please.
So let me just do this. I want to make this a little bit more cogent. I want to make it exactly right. So I'm going to the little doji candle, that indecisive candle right there. I'm going to put in the cup formation. I'm then going to go to the upper side, and I'm going to go to the backboard. I'll go to the bottom, because in this case it's important. And then I'm going to go to new parallel. I'm going to make it green so that we can see it nicely. And we've got that. It coincides very nicely with the left side, right side price time match. This is the and the Chapman wave inside wedge. Okay, I've got something that I think is clarifying for me a little bit what we're looking at. Now, it was funny. You're looking at the silver. I was looking at the. I was looking at a couple of things. I was looking at steel. I was looking at I was looking at the oil, and I was looking at the integrated oils, and I was thinking, wow, if I can see gold and silver moving higher, what would make the copper, the oil, and even the steels move higher? And in some cases, like with the steel, last week they were already moving higher. And that was saying to me that there's internally a change going on that started 3 weeks ago when I was talking about a very important week in the market. And we saw the metals and we saw many of the commodities just completely break down. And that was like what I call the coda, the move that says, I'm going down now sharper than anybody would think it was possible after just kind of meandering to the downside. And I'm going to scare the daylights at everybody, and that'll allow for a really good short covering rally. That's what I think we're in right now. So SLV is at 14.66. That's the iShares Silver Trust. I've got an inside Chapman Wave inside wedge. I usually make that pink. Let me make that pink. And it goes to the 13th of August, and the price target would be 14.97. Well, we've already today gone to a high of 14.72. So you've only got a few more days, and I think it might do that beforehand. But what's really important about this is that the daily technicals were showing a tremendous divergence, a positive divergence, and you needed just some trigger on the upside for a break above the resistance levels. And in the silver SLV case, it was the high of the 31st at 1434 and the high of the, what was that? The 20th at 1435. And then if you got a bonus and it filled in the gap, and that gap was from the low of the 14th of July at 1463 to 1447 on the 15th, that would be a bonus. And it would go straight to this target line, and it's done that now. Okay, here comes the issue. We want to see, not we, you're in the position. You want to see follow through. Well, the follow through says that the 1463 low that was made on the week of the 13th of March of this year, there has to be a close this week above that. And if there's a close above it, you would like pretty much in the same week to take out a left side peak at 1485, 1515. We don't even have one until you can get to 1570, the week of the 19th of June. That's really very far. So let me go one step at a time. The 120-minute chart, very nice, good action. First of all, good, congratulations. Really, you got a good eye for timing these things, and it worked out really well. You've got an A, B, C, overlapping D, and it's gone to an E, makes 1451 to 1428 is going to be your support level. I'm going to make a suggestion now, but I know that you watch, someone else better be careful, but I know that you watch this really closely. My suggestion is that you have some part of the position. I would prefer to see 2/3 of your position treated as a call because you got it at such a nice price. And the 1/3 position becomes a trading position. And if at any point in the next few days it gets to that 1480 area, you raise the stop on one of your positions, or if you've got an option, maybe you can take one of your calls off just to reward yourself. But I would like to try as long as possible to stay in this position. And one of the reasons is I think we're looking at a few weeks, possibly, here in the golds and the silver, maybe even crude oil, Wow, it's a long time since I said that. And to top it off, I think the bar, well, I have to wait for the close, but the bar that we're looking at here in the daily chart of high-grade copper is saying, don't ignore me. This is a really important characteristic, because if in, not next week, but in 2 weeks' time, you have not even taken out half of the support at 2.36 in the high-grade copper, but instead gone to 2.40. That's going to be really good. That leads me to the gold. If you want to hold on?
Sure, Basil.
Okay. So we're trying to do the metals here. We'll be right back. Basil Chapman, Dow's up 214.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. So silver is in a leg a D as well. So this is very interesting because we're coming off the bottom, and Ds are usually where you got to be kind of careful. But when you come off the bottom, the only way you can go higher is to make higher peaks, right? And if you're going to make higher peaks, it means that obviously you're going to get to a D. So this makes D less important than if we were going to, say, recovery highs or all-time highs. Because what happens with this particular D, what we're looking at is their support is at 15.32 on the silver contract. And most importantly, you've got support down at the 14.94 area, but actually that's on the 120-minute chart. I would start splitting it up, and I'd say that the 32-period moving average at 15 is very good support. So somewhere between 15 and 14.95, which should be good support. And if that's not even touched in the next 2 days, but instead silver moves to the 1550 level, it's at 1532, that's going to be very positive. Brett, I think you've got yourself into a really nice situation because the downside has been ameliorated by going flat for about a week or so. And that means you don't have to get the V-shaped bottom. Instead, you're getting a cup formation. They're a little bit more reliable when you've got the technicals rallying so that you've got a positive divergence on the H pattern, the right test, the right side test, and this has been successful. So I like it. I think you're in the good position. One other thing that I wanted to say to you is at this particular point, even though it's a weekly chart that I was doing an analysis on, my thinking is that it could go a couple of weeks, but it has to, if silver at any point starts to close below that 15 to 14.80 support area, maybe 2 out of 3 or 4 sessions in a row, I'd say, whoa, that's going to limit the upside. So I need a little bit more information, but so far everything looks pretty darn good. Congratulations.
Thank you, Basil. You're always very thorough, and thanks for tying in the copper, the oil. I'm watching the same things just to see how that all reacts. So have a great day.
Good. That sounds good to me. Hey, thanks for calling and congratulations. Nice trade.
Take care, Basil. Thank you very much.
Thank you. So, okay, folks, we're almost going to run out of time. Let's do this because we're about to run out of time. We've got programming all day, wonderful programming here. Don't forget Tom's webinar coming up on Wednesday night. Go to the front page, check it out. Hey, look at this. And check out my opening call. This is just a beautiful time to get in with all these charts, all these patterns that we're looking at, going short, going long, doing all the stuff that is important right now. So this Dow chart on the Dow says, the daily says for 17,480 to 17,450, somewhere in that area. If there's a close on any one day this week, it just has to be one day. It doesn't have to be 2, just one day. A close in that range says, failure, it's already failing. I think there's just enough room. We've come down long enough that there's enough room for a bounce that can be extended as the different sectors rotate higher. For instance, we've got the oil up nicely. We've got those integrated oils up very, very smartly. I think they're going to go a little higher, and then we'll deal with it. But in the meantime, that can help the S&P, can help many areas, help the Dow as well. So I think that the Dow has a chance to test the 17,672 200-period exponential moving average, maybe even go a tad higher, maybe hit that, where is that, 17,738. I'm not sure about that, but it could go to 17,690 to 17,720 in this rebound, and that's going to be a big test on what happens next, because the 9-period moving average in the weekly is 17,709. So I gave you the downside to be careful of and the upside potential projection. And let's just go to the VIX index, which is at this particular point at 12.45. It's showing a pattern that says, you know what? If the VIX closes below $12.20 to $11, and $12.20 to $12 in the next 2 days, it's going to say this market could go a little bit higher before it gets activated one more time. So, hey, thanks for being here. Have a wonderful day. Stay tuned for great programming. And please check out my opening call. I think you will be satisfied. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.